Hey, good morning, everybody. This is Ian with Income Switch. I just want to go over a couple different things. I actually just did a one-on-one lesson with one of our members, and one thing that we continue to talk about was scanning and how to find good swing trade setups. I don't do a lot of day trading, so most of what I try to do is swing trading, whether it's a stock or option. Calls, puts, naked puts, iron condors, put credit spreads, or just individual stocks, whatever type of setup that we have that I continue to look for. So I went over a couple different scans that I was looking that I typically look for on a daily basis. Um, and one of them, obviously a big one, is a 20-day moving average crossover. And what the scan is going to show me is actually all of these stocks that closed on Friday above the 20-day moving average. Now, a lot of people will use the 20-day moving average as an indicator to buy and also as a stop loss. So this is a really, really good scheme to have low development set for you guys. And you can even change these as intraday. So if you want to see what's above the 5 minutes intraday 20-day moving average, this is another good one as well. So it's always a good thing to have set and always a good thing to keep in the back pocket. Uh, Actually, as an example, Google does give you a daily bearish trend, but you can see intraday. If you were day trading, you could have actually played Google intraday on Friday. And I have not looked at the chart, but it's something that we can take a look at here. So here's our daily, which is in the bearish trend. Did have a nice little bounce, but intraday. Let's see how that looks here. We did a scan. So you can see that it did cross. I have my 20-day moving average as the purple line, and it did cross right here, which means that you could have played a nice intraday day trade, which means you would have bought just hypothetically around 10.99, and at your close below would have been at 11.02. So, or yeah, about 11.0250. So you could have made a couple bucks if you were day trading that, and it's just a good scan to have. Another one that I use quite often, especially for what we do income switch, is our naked put covered call scan. Now, what this is doing is it's obviously looking for puts between the price of $5 or above, expiration within 60 days, and we are looking for a probability of out of the money between 30 and 80%, with a volatility of at least a minimum 40%. Um, does not have earnings within 30 bars, which is 30 days, so no earnings within the next month, and a moving average at least 2% above the 20-day simple moving average. Now, for some reason right now it's not pulling this up, but I can tell you that there is quite a list, just because we're on the weekend, so a lot of these schemes might not pull something up, but I can tell you that there's quite a lot of stocks in here that do typically pull up on this, including one that we saw. Here we go. So, you know, a lot of these I wouldn't play naked puts on. Key Corp I wouldn't play, it's just not volatile enough, and uh, options aren't liquid enough. Mattel would be one that you could look at. So if we were to look at Mattel, I know that this was actually a play. So I probably wouldn't typically play this one because it was earnings. You can see it did fill a huge gap there as a 1461 resist. There's now support that it did break on Friday. So you could see this, or you could see it move right up to 16.99. But one thing you have to pay attention to is that anybody from 1461 up to 1802, those people could be ready to sell because they did buy above where it is now. So there are quite a lot of sellers still in this stock. So that is something to watch. If the market does turn down, a stock like this is going to be one of the first ones to go. So just be wary of something like that. But the scan does pull this up. Scan did big resistance, and it did close above that in 23. So you would probably a $14 or $15 put if you're to do a naked put or some type of credit spread with that as well. Another one that a lot of stock traders use, I call bond fishing. So what this one is looking for a downward trend for 2, 3, or 4 weeks. The 8 moving average is now above the 20 moving average. Price is above the 50 moving average, and it's between 10% between the 50 and 200-day moving average. So this is just looking for downtrending stocks that are now showing signs of life and showing signs to bounce off the bottom. This is a great scanner for people who trade stocks. I would not use this typically for options, but this is giving you an idea of what closed Friday within this parameters and stocks that you could look at for Monday increasing with the market if it does continue to increase. Another one we'll look at would be, those are really my main ones. I have 50-day moving average crossover, bearish candle patterns, bullish candle patterns, and then I have some custom scans as well that work with what is it called, a CBT breakout tool. But 50 moving day crossover, one thing that keeps pulling up on these, and I will probably be looking on Monday to make a play on this, is Disney. So you can see it pulls up on my 50-day moving average scanner. It's pulling up on my 20-day moving average scanner. Yep, my 20-day moving average scanner. And should probably pull up on my 10 above the 20 moving day scanner as well. Yep, and here it is again. So 10 crossing the 20, which is a big indicator. So if we were to look at Disney, you can see that actually what it's setting up on the daily chart, and what it's actually setting up is a nice squeeze. So here's the 20-day moving average. It is the 200-day moving average, and it is above the 200-day moving average. The purple line is my 20-day moving average. The orange line is my 50-day moving average, and the white line is my 10-day moving average. So as you can see, they are, can't really see here, but they are fairly condensed, which also is going to be a squeeze pattern. So this is using typically what a Bollinger Band, as when the Bollinger Band lines are coming in, it's called a squeeze, and it can move one way or another. It can either explode upwards or fall pretty far down. And just out of curiosity, we want to make sure that this is also on my squeeze pattern. Here's my squeeze scan, which is using the Bollinger Band, is equal to the squeeze, and scanning, and Disney. Yep, so Disney is on there. So Disney is definitely a play that we'll be looking at next week. Whether it's selling naked puts on it, buying out of the money calls, buying in the money calls, I don't know yet, but it is something that we're going to do. You can see it is on a whole lot of scans, and it is above the 200-day moving average, which is a great sign. So this meaning if the market cooperates, Disney should be a very, very nice play for all of us next week. Again, there's a lot of different things that come to it, but that's something to look at. I can share these scans with you guys. Please PM me, reach out to me if you guys are looking at any of these. And if you have any questions at all about what I'm talking about, or want me to look at a scan that you guys are looking at, or charts, or whatever you guys want, feel free to reach out to me anytime. All right, thanks guys.